Being super selective when picking long opportunities in this market while expecting a larger decline on the indices from here. Gary Glover from Novus Capital is the one to guide us through the trades in these tumultuous times. Good morning, Gary. How are you?
Yeah, I'm good, Chris. How you going?
Well, there's been a lot of movement on the markets, up, down, sideways, and you're out here picking up the best trading opportunities. But before we jump to your trading stocks for this week, let's check in on those indices. It's been sort of the same for months now, rolling out on the playbook that you'd mapped out a while ago. On the US markets, are you still viewing bounces from here as opportunities to enter more shorts?
Yeah. I know we've definitely hit our sort of our ABC target, which sort of gave us 11,000 there in terms of the first leg, projecting it down for the second leg. But still think this has got to go a bit lower here, Chris. It sort of looks a little bit undone here. So I think hopefully we get a little. I noticed the NASDAQ made a little false break there session or two ago, so it sort of gave us hope that we might get a little rally, maybe back up to maybe 12.2 or something like that. But I still think any rallies are going to be sort of short-lived. So we are down the bottom of that channel there. So you might sort of see something there. But even last night there, I mean, the Dow had a nice bounce, but the NASDAQ probably underperformed there. And then by the time we've opened here, Snap's already reported pretty poor, and the NASDAQ futures are straight back down to square. So it's, it is, that index should underperform here. So which is definitely the case and continues to keep showing that. So it's going to be a bit of a struggle here. So this is not as bearish as 2002, but that at the time there when the growth got crunched, NASDAQ really struggled to have any half decent bounces there. So we might get a few small ones here, but I don't think you're going to get any big ones here. And I still think we're going to see some sort of lower levels here into that sort of late June, early July, and then potentially sort of something into October as well. So hopefully we'll see a decent bounce after that. This sort of hopefully July sort of low, and then maybe some sort of retest in October, like maybe a high low or something like that. Well, at this stage, I think there's a bit more downward pressure to come here. It's even the volume last night. Look at the volume on a lot of the US indices, as much as they have big days, big wide ranges. The volumes are still pretty light. That's not, if you're looking for sort of a good deep low and a recovery, you're normally seeing big volume come out of those lows. So I definitely hadn't seen that there. So that's not how lows come in.
It's normally the more capitulation volume, that real heightened volume at the absolute extreme lows, is it?
Yeah, that's right. So we expect to see a few more legs down here as well. So we probably do need to see something in between here, some sort of minor rally here. But I say it's just not showing too much strength here so far. So every time we think it might have a little bit of a bounce there, it's a bit of a stutter. So but I mean, the Dow, being that old index, that'll bounce more, and then the S&P a bit less, and then obviously the NASDAQ even less again. So Well,
it's a good point to transition to the S&P. You mentioned it there. The target area you've got is sort of similar to the NASDAQ in that it's the lower end of that range is the pre-COVID highs. Is that still what you're looking for on the S&P 500?
Yeah, no, exactly. It just makes more sense to sort of come back down to there. It's a fairly decent decline down there, but that sort of, I'm probably unlike a lot of people now that sort of everyone's starting to turn quite bearish here. And as much as I've been bearish for a while, and I think we'll see lower levels. I think the rally out of this low is going to surprise a lot of people. So that's why I sort of think it needs to be sort of a lot deeper. So most people will be afraid to buy the next rally, and that's exactly why it'll be a good one.
Just to clarify there, you don't mean the next imminent rally in the next days or weeks. You mean after we get to those levels that you've highlighted?
Yeah, 100%. Yes.
Yeah. Okay. Good clarification there. Now, the Aussie, you've said for some time, it's going to be more resilient in this market. The structure, the value that we have compared to the high growth in the US, it's all working in Australia's favour. But your report and the chart here says we've got another 5% to go lower. So That's under the pre-COVID highs for the Aussie. So where are you getting that 5% sort of target and range from?
Yeah, so I mean, so far we've really just got an inside week there last week, Chris. So we didn't really get much of a bounce there. So they sort of what I refer to these sort of broadening sort of tops there, they invariably end up marking marginal new highs and then marginal new lows. So I expect us to sort of come down and retest that low, the early 2020 low there around, exactly around. So I expect us to undercut that. That's just sort of something which these indices tend to have done in the past. And I think the sort of broadening nature and these sort of these tougher times there, you'll get, it's funny here, the 40s and the 70s were considered low growth, I guess low growth periods there. But the markets were super volatile in those periods. I think the 40s had like a 40% range. Basically, the index dropped around about 40% and had these 70% rallies, and it was sort of something similar for the 70s as well. Sort of something, So some of the pullbacks and some of the rallies and stuff there, can be quite phenomenal in these sort of lower growth periods. You just get really, really massive volatility. So, so it might be a bit of a slog ahead here, but the one thing, it's not going to be dull. History has shown that these tougher periods there, the markets are actually even more volatile. So I expect to see some big swings back and forth here.
Well, that's a good point to move to the trading shares, because if there's good opportunity, then being able to understand when those opportunities are presenting themselves and which ones to jump on is worth its weight in gold. You've picked up Wesfarmers, so that's probably a good part to start. How's Wesfarmers come to be on your list today?
Yeah, a couple of things. Obviously, we're sort of looking at obviously, we've had a fairly decent correction there, come back to around that 50% of the range in the weekly. So just sort of something to be mindful of. But I think more importantly is that 2020 high. That's the sort of, that's where a lot of that's where we're looking for our NASDAQ and our S&P to come back to those levels. So to me, that's like a bit of a magnet, for a lot of stocks and for a lot of indices and stuff there. So I think it's a bit of a big level to come back, and you might describe this as an ABC, or that definitely that the C leg has definitely got at least a sort of 5 or 7 wave structure in it as well. So it's a fairly long sort of structure within that decline there. And but yeah, it's just oftentimes those are big sort of support zones coming back to that old high there. So we can find some support there. We were already sort of showing a little bit of support there last Friday, and a bit of bullish divergence sort of coming through. So reasonable volume, a little bit exhaustive. That sort of volume on the week of the low as well. So if we can hold here, absorb that, it's could be quite important there. So it's funny, the consumer staples actually normally stocks that hold up. If you go back and look at bear periods in the past, consumer staples are actually one of the stock that actually have the least corrections in that period, so tend to sort of hold up the best. So it's interesting how this is actually probably just because of COVID there, and it's sort of outshone in the COVID lockdowns there. It's probably a little bit out of cycle, but it's probably led the decline, some of these sort of stocks that have done pretty well in COVID time. So but yes, I still think we're probably getting down to a value point here, and a big technical zone as well. So I think just under 46 here looks like a really important level.
Okay, we'll watch that old high that we had pre-COVID. Yeah. Now, gold, that can be a flight to safety, but it's also in times when the market's falling, but also inflation, some sort of hedge. How's that playing out at the moment, and how's that feeding into the trades that you're picking up?
Yeah, so they all can be reasons there, but it's sort of, there's all those things you mentioned there can be kind of positive for gold here, but they haven't been so far. So really, the gold's sort of been quite volatile, been more of a sideways sort of pattern there, and it really hasn't sort of, compared to a lot of other commodities there, it hasn't really sort of shone in a market where you probably think it would have shone. So that's always had me a little bit a little bit concerned here. Like I know gold does have a reasonable correlation to the market as well. A lot of people think it's a bit of a hedge here, but the reality is that gold stocks often go up when the market goes up. So, yeah, but I guess, if we just got to look at this on its own. And at the moment here, we've definitely got this sideways sort of pattern here. What's appealing to me is that there was some reasonable volume in that last rally. So in the first high low, we saw some decent volume coming in there. And now we've sort of come back to retest that low. I've seen some volume again down at this low here. So if this is sort of our September low is our sort of our low, then we've got a January first high low. This could be a second high low setting up here. So this is a second high low. This potentially could be setting up a big basing sort of pattern here for these gold stocks here. So just interesting, the volume there. Good volume at the low on the way down, a bit of a sideways shimmy, no volume, no selling there come in. And then we had that little up day and the volume came in. So I thought, oh, it looks pretty interesting here. Just the beauty here is that if you're buying pretty close to, when I was buying that sort of stock within 10 cents of the previous stop. So, if this is going to bounce back up and retest the high, you're looking at it like $1.30 to $1.50 target, and you've only got a 10-cent stop. So 10 to $1.50, that's 15 to 1 risk reward. That's, Paul Tudor Jones looks at, he considers 5 to 1 a big risk, big risk reward sort of setup there. So that just gives you, he just means you're not risking too much to make a lot. And that's the type of trade that I like. So yeah, I just like the way it's set up here. So look, I might fail here now, but I've managed to sort of get a position on average up a little bit as well. And it looks pretty positive. So I think like a lot of the stocks will all look pretty similar. That's probably one of the other reasons I like there. And the volume characteristics looks pretty constructive. So yeah, we'll just see if we can get going here.
When you say it looks pretty similar, is that why you've pulled Silver Lakes in as another trade as well?
Yeah, there's a Silver Lake, Northern Star, I think Gold Road. I mean, there's just quite a few. So basically, again, we've got that sort of, I think in the Silver Lake there, we had that September low, which would end up being a false break. That was a cracking trade as well. We went to margin new low, then failed, and then just took off. And then we've come back in January, made a high low, and then maybe come back. See that little congestion pattern there? Just the last probably 4 or 5 days of the low here. Just that nice tight congestion there. The volume dried up as well, so that's pretty interesting there. And then I think the day before the pop, we saw a bit of volume come in, which is sort of constructive there because it's at a bit of a key level. So again, if that's the sort of second high low, we've got our stop at our January low, nice and tight. Yeah, so I think in this environment where it's a little tricky, if you can get on sort of high risk reward trades, then you can bet sort of a bit smaller, which we probably should be doing in a hostile environment, and then you get upside, which is bigger as well. So yeah, so I think that these look quite good there. So there's definitely foundations as to why it can run as well. So yeah, I think they look pretty interesting.
Just on that upside, talking on Silver Lakes, that entries in that same congestion period, the stop back around the low that you mentioned, Jan Feb.
Yeah.
What kind of profit target would you be looking at? That most recent high in that sort of 220 area?
Yeah, look, I think that 185, 190 is the minimum. That would be sort of the bit of the left shoulder there. But if we look at the weeklies and stuff there, really, if this is a bit of a base setting up here, then we're looking for it to go above that sort of 225 sort of high there. So we're really looking for it to head back up there. So it'll all be about determining how impulsive this moves off the, if it starts to sort of get going here and some good volume comes in and it looks pretty impulsive, then we can hopefully open the shoulders. If it looks a little timid, light volume, bit of a struggling up towards that 185, 190, then maybe we determine it not quite as bullish as we'd hoped for. But yeah, we've got our position on, we've got our stop in place. Now we just got to let it do its thing. Hopefully we'll see something impulsive, see some decent volume there. But it's a market there where you're not sort of seeing super volume, but you can see some decent moves. So yeah, probably don't make too many assumptions too early here, I guess.
Well, we've also got in your report here, Soul Patts, Washington Soul Patts, ticker SOL. What's appealing on this one?
Yeah, again, so we had a pretty big correction on the weekly, so come back 2/3 of the range, and then we've seen a bit of a bounce off that low, which is pretty constructive, and then we've seen a bit of a pullback after that rally there. So that's really only gone up sort of what's that, 1, 2, 3, 4 weeks. Now we've come back sort of the same amount of time, so 1, 2, 3, 4, actually a 5th week down, and we haven't gone to a new low here. So it's actually sort of holding up quite well, and but yeah, and the volumes are a bit lighter as well on this decline. So there's not a lot of selling coming in on that decline. Yeah, so very, very, very light there. So just starting to show a little bit of relative strength compared to the market there. So yeah, again, we should be, some of these stocks should be starting to hold up here. So as the market's going to new lows, some of these stocks should be sort of starting to make high lows. And yeah, those are the ones that we want to get most interested in. So yeah, it may not be ready yet, but definitely showing a little bit of outperformance here.
Okay. And if we move to the healthcare space, this is something you've talked about a few times, coming back to normality with hospitals reopening, surgeries, elective surgeries and the like. How does that, we're not quite fully back to normal, but how does that return to normality help Sonic Healthcare SHL?
Yeah, so have a look where the Sonic found its low there, Chris. This is really, we talked about the importance of those old highs. So when they're really significant old highs, that's really important. So like the Dow and the S&P and the NASDAQ and Wesfarmers, we're just seeing that. This is a really important level. So I know sometimes, sometimes they don't sort of come to fruition. They're the old highs, being support and stuff there. But I think if they're really important highs, they often will. So no surprise to see this stock actually bounce off that level. So seeing something sort of constructive there off that low, bit of a base, some reasonable volume in that period as well. So I saw some decent accumulation. So has held up pretty well in what's been a pretty weak market. So yeah. So maybe we'll drift back, consolidate, and yeah, and if we can just sort of hold tight in here while the rest of the market gets weakened off, that'll be constructive for this sort of longer term here. So yeah, still really like the healthcare space, but yeah, we just got to be a little patient here. But I think again, showing a bit of relative strength, bounced off the key support, had a pretty healthy correction wise. Yeah, a lot to like here. Probably just need to see a bit more work here. But yeah, if we can do a little tight consolidation there, it'd be pretty positive there. But I definitely think this is a sort of stock that we should be looking at here longer term there. So looks positive. I thought I'd just show that chart because that just highlights exactly what we're looking for in a lot of these other things at the moment.
Well, that is a good point. If we just remember, you said we're looking for a 5% hit on the Aussie, and that's bringing out to a low or bringing back to a low. But you're servicing companies that are throughout this period actually creating higher lows, and that's showing that relative strength against the index. These are the companies that you look for to be positioned in when that bigger rally comes.
Yeah, that's right.
Bases that are building.
Yeah. So I'll probably be adding a little bit of some of these posies there, just on the weakness there, and then just maybe just getting sort of starting positions there. I still think the market's got further to go downside here, but not some of these stocks are going to find the lows earlier, and they're going to build higher lows. So yeah, we're sort of trying to find those probably stronger, outstanding companies, ones that are going to hold up better. But yeah, starting to sort of see a little bit of that already. So yeah, all interesting.
Well, that's what we'll keep watching. You've also surfaced Media OML a ticker. Now, a bit like the travel shares, some people are surprised to see this late stage pull, early stage bear, mid stage bear, that these companies are actually kind of doing well or having some sort of appeal. So what's normally this kind of growth, when growth gets crunched, advertising, consumer discretionary doesn't fare as well as like the Wesfarmers you suggested. What's OML doing, and what's the chart picking up for you?
Yes, I mean, obviously a tough sector. So outdoor advertising, I think they got advertising panels and stuff at airports, a lot of the transport hubs. So just a really tough sector to be in here, obviously, for the last few years here. But again, should sort of come out of that. So it has had, after that sort of April 2020 low, so it's had a bit of a rally from that, out of that low, but then really gone sideways there. We saw a little bit of a couple of little shakeouts there. We saw a small little shakeout to the bottom side, a little false break there into that July window there. And then we saw a little shakeout to the top side just following that, a little false break again. So this is sort of, again, what we're expecting for our market to do, sort of something similar here. But again, we're just sort of watching it sort of come back down the bottom of this range again. But largely it's really gone sideways, a nice little tight sideways consolidation there. So it's really a correction, what we call a correction in time. So at some point we're going to basically get going and break out of there. So I think any sort of false break to the downside here and then reversal there might be worth following here. I think this is obviously a chance of being the recovery player as well. So but it just looks interesting down the bottom of the range. I guess the beauty of buying it down the bottom there is that we can we've got a pretty tight stop. And if we get to be the upside there, then we've got a fair amount of upside as well. So that's all we can ask for in the trading sphere, is to get a good risk reward parameters there. So we can buy sort of somewhere relatively safe with a low risk. That's what we're looking for.
That's a good way to trade the markets. A little bit of risk and a lot of upside. That's the way to take it. Well, thanks again for the insights, Gary, and we'll come back again next week.
Okay, thanks, Chris.